Even water dripping on a stone eventually leaves a mark. You just
where are
keep
you coming
dripping.
up with these?
Dude, I'm just going to continue to write stuff down. Hey, can we write that down over here?
No, say that again. Eric, say that one more time. What is it?
Even water dripping on a stone eventually leaves a mark.
Yes. You guys hear that?
Keep
You guys hear that?
blocking, tackling, and
Yes. You can't see
get
it with the
1%
bright light.
better every week, 1% better every month, and whatever you're trying to do.
My money don't jiggle, jiggle, it folds. I like to see you wiggle, wiggle.
What's going on, guys? Welcome to the Let's Be Honest show, where we talk about business, lifestyle, and everything else in between. We got my man Erik Thompson on here today, which I'm super excited about. Stockbroker, real estate, kind of extraordinaire.
Investor.
Not a stockbroker.
Investor.
He's a money manager, man.
No, but
He's above
he
all
manages
that.
it.
Investment advisor.
Investment advisor.
Investment advisor. But this is the man that you want to be in charge of your money when you don't want to be in charge of it. So, anyways, he's in charge of a lot of my money. Actually, a hell of a lot. You know,
He handles
all of
some
us.
line.
Yeah. So, and we got him here today.
And he
so
makes us money.
he does, man.
That's the best part.
Most of the time.
Well,
He does. Even in a down market, you make money.
A little, eking out a little bit of gains here and there.
I love you
about
said-
not
you
getting
said
killed.
eking-
It's about
eking out.
surviving.
About surviving right now.
Yeah,
The gains will come. Protect the
Well,
losses.
for those that
That's
don't
it.
know, though, Eric, what company are you with?
So I own my own registered investment advisors, Peerless Wealth, out of Columbus, Ohio. I was with Wells Fargo for 15 years and left there about 3 years ago, and just wanted to kind of be in charge of my own destiny and give advice in an unbiased format and not be sort of constrained by the big kind of Wall Street firms that only want me to stay in a certain lane. And there's a lot of really interesting stuff out there if you have a little bit more freedom to do so. And I like being an entrepreneur. I didn't need.
That you are. You have some
So,
other
yeah.
investments besides your own personal business as well, too, right?
Yeah. So you and I invest in a lot of
Yeah.
flips and some rentals, and then
He's also one of my business partners.
Yeah.
And this
And
guy
then,
just takes care of all our money.
Dude,
Crap,
he
what the
does,
heck?
man.
What the, he is the
He's
money
taking a
man.
piece of all of it.
the money
He's
man.
like, hey, here's
He's
your
that
money. Let me eat all of it.
and I'm going to speak to that because I'm guilty of this. So I'm also I'm investor, part owner of some clubs and restaurants in the
Yeah.
Columbus area, and I think there's you want to diversify your income streams, but you also want to focus on what you're really good at. And if you get involved in too much stuff outside of what you're really good
Yeah, we
at,
figure that out.
it
Yeah.
Why are you looking at me?
you just kind of
Said
forget
we.
about it, and it doesn't
Okay.
really work out too well. And so I'm a fan of whether it's a landscaping business or a rental empire or a flipping business or a hair salon, whatever it is, focus like 90% of your time on that. Build that, hire people. That's what you're good at. And then maybe have a couple little side hustles, but don't get too, out
Like, here's
there
a
in
shiny
things.
object. Here's a
Yeah,
shiny
exactly.
object. Yeah.
Oh, I can rent Fords out in Miami. I can do a car rental company in Miami and make this that.
Let's not go
There's
into that.
all these opportunities, but it's like you got to focus. And if you're not going to focus, just invest passively. Just if you have extra money. Obviously, I have a self-interest in this, but give it to me. Buy shares in companies, buy shares in mutual funds, index funds, and just don't forget. Let other people run it for you, and focus all your time, 90% of the time on what you're really good at, and just have a couple of side hustles. That's
So,
Yeah.
are you actually an active investor in some of the restaurants and things like that?
I'm
or
very
do you just-
passive. I'm more active than if I bought shares of McDonald's stock, but I'm not as active as the main owners that run it day to day. It started
It's more
with-
like a capital partner.
yeah, pretty much. It started with them needing funding for fireproof and banks aren't going to lend to restaurants because there's no collateral there, and it's a volatile.
You are the bank.
And it's bars and restaurants and clubs have had it tough because COVID happened, which was just kind of right after I got involved, so my timing wasn't that great. And then Columbus, downtown area, we've had some crime.
It's everywhere, dude. I mean, just all across the nation, everyone's got the same issue.
Kind of scared people away, but we're rebounding
Yeah.
from it, and it's actually getting better now. But there's no way I would ever start like a restaurant or bar on my own. The people that I partnered with have been doing it for 20 plus years. So I'm basically latching onto their expertise, more like a capital partner.
Which is a
like you
great
said.
way to do it.
Yeah.
That's always the way to do everything, though, right?
Real estate.
Focus on what you're good on.
Yeah.
The stuff on the side, get other people to run it. Yeah.
So like even like I look at Eric as like it's kind of like here's like Terry who wants to do everything. It's like I'll just risk everything. But then Eric's like, yeah, bro, I'm not letting you borrow any more money. Right? And like
that voice on your shoulder.
It is, man.
Yeah.
It's like that angel on your shoulder. It's like, dude, I'm gonna be that 10 to 20% that you said, right?
Yeah.
That's going to reel you in back to reality. That you can't risk everything all the time and be the fucking rodeo king and just do everything.
Well, and as entrepreneurs, we're all kind of guilty of our ego saying, you'd like to tell people, oh, I own this, I own that. Well, okay, is it making money?
Yeah.
It doesn't matter. Okay?
So true.
It doesn't
money
matter.
does it make?
And how much time,
Negative.
how much hassle. I got to do a tax return. Like I couldn't file my taxes because they were late in the K-1s for the restaurants. Like there's a lot of hassle. Of
like
that stuff
going
too,
into
so.
like the social media world, like there's a lot of people that was making money in February of this year, and then once you look at this month, they're not flexing anymore. It's a different ballgame. You know, what do you think about that, man?
Is social media business or is it?
Yeah, what do you mean?
It's kind of like those people calling themselves, everyone calls themselves an entrepreneur now.
Yeah.
But how much are these people actually making? Do they actually have employees, right? It's like, everyone puts it in their what now? Their Instagram bio, entrepreneur.
I have an LLC.
Yeah.
So that's like
LLC
online. Yeah. Is it making money? Yeah.
Again, not right. I'm not, shitting on anyone for that, but
I will.
yeah, I know you will. Terry's anti-guru.
Dude, I'm so anti. I just want people to be real and honest with where they're at. Let's be honest. Like,
What do you think with all that?
Be real with where you're at.
Like, it's if
what's your target demographic? Are this the type of people that you're seeing coming to you for like investing more money with you, or?
So my client base is pretty small. When I left my previous firm, I actually sold part of it, and I kind of, most of my accounts are fairly high net worth people that they're attorneys, they're doctors, they're entrepreneurs.
But not like Instagram stars or anything?
No,
I CC'd him on an email with my attorney
no,
today.
I don't have. My
have any of the social
half
media
my clients are
influencers
retired. No, I don't have a lot of.
More of the
flashy-
steady income that have.
I don't have a lot of flashy clients. I just have clients that they're good at what they do, and they want to delegate.
Yeah.
They want to delegate their investment advice to a professional. There was actually a study done by Vanguard, which is one of the massive mutual fund institutions. And actually, historically, Vanguard has been a firm that it's kind of a do-it-yourself firm. You just kind of buy their funds and skip the advisor. But Vanguard did a study on individual investors that self-directed. They picked their own mutual funds through Vanguard. And so they had access to these accounts because investors were either buying this stock firm or selling this through Vanguard. And then Vanguard also has a guided advisor department where if clients want a professional through Vanguard, they will pick the mutual funds and asset allocate. And they analyzed the returns over about a 10-year period, and they found that the investors that were guided by a professional, on average, had a 3% a year higher rate of return than investors that were doing it themselves.
Even paying the fees and all that.
Well, let's say I charge 1% a year, but I do 3% better. So there's 2% of alpha there.
You're like the mentor, pretty much.
Yeah.
It's a paid mentorship.
And Vanguard proved that in the study, and it's due to a lot of things. It's due to, the average investor. They don't own a small cap fund, or they don't own a REIT fund. They just own like a typical stock fund. But the biggest thing is, when you're sort of directing your own money, your emotions a lot of times get the best of you.
They always do.
And a lot of times, the average investor, and this is average, there's exceptions, but the average investor, they'll get overly greedy when times are good, and they'll get involved in asset classes, whether it's crypto or .com or IPOs or whatever it is.
I know that.
And they'll get in at precisely the wrong time after all the hype, has. And then, when things go down, they'll want to cut their losses and panic, and so they sell at the bottom and they buy high. And you do that even once with a significant amount of money,
You're screwed.
And you are. You could blow 20-30% just in one bad decision, especially in volatile markets.
You gotta create your own
So,
destiny.
some, 1 out of 10, in my experience, of individual investors can maintain a fairly even-keeled emotional, but most, even with my own money, it's tough. So I got to always, I'd be like, okay, if I was advising myself, and so. Yeah, that's kind of really where I add value to client situations.
That's the part of partnering up with people, though, right?
Yeah.
Like the stuff that you don't know about, you're partnering with somebody else. They're
it's
you have
like
their expertise, like money management.
Yeah, when you
I don't know how to manage
help
money.
me
I
with
know how to
my
make it, but I can't manage it.
When you help me when we do our flips together,
Yeah.
I don't know what drywall costs or who to get to do it or
how many shoes Bobby's bought that week.
Oh, that's where it's going.
Let's call them out. I've been good lately, man. I've been good lately. I've only bought one pair of Gucci's in the last month.
You actually have.
How many shoes have you bought in the last?
Well, are we talking about him or Karina for?
Ooh.
Are we going purses in that?
Let's see. How many?
You're getting me in trouble now. Karina's bought a lot of shoes lately. Me, I've been good lately.
Bro, I bought a pair.
No, here.
Bobby's
I
got
went
a pair
crazy
of regular
during-
Nikes.
By the way,
on
I
today.
want to throw
Pumas.
this in here.
Oh, shit.
This is what I wear.
Dude,
by the
what do you
way.
mean? I'm
All
wearing
three
Pumas.
cameras.
I'm wearing
Bleep,
normal
canceled.
shoes.
Reebok.
Sponsors needed, by the way. Sponsors needed.
The room.
No, dude, I went crazy
wore
during
those
COVID. That's all.
specifically for this podcast.
COVID was crazy. Like I was buying 20 pairs at a time because I had nothing better to do, and I was like, that's it. But
The
after
room just
COVID,
started smelling exponentially worse.
I do have a lot of pairs.
Now it's like cigar and feet smell mixed.
Which one's better?
Eric, I
Touche.
do remember your
Touche.
the talk at our mastermind. When was that? When did we do Put in Bay? Was that August?
Like a month ago,
July.
man. A couple months ago.
That's over the summer.
Was it
July.
July?
Was it that long ago already?
Dude.
Well, wait,
yeah.
we did your bachelor party there.
We did.
Oh, yeah.
And
that
that
was
wasn't a
last year.
mastermind.
That
That
was
wasn't a
last year.
mastermind.
No. But
Was it a bachelor party or mastermind?
actual-
It was the same thing.
so the actual.
We have fun when we work, so I get them mixed up.
That's what's so cool. It's like the work and the fun, it all kind of mixes
Yeah.
and blends. It's cool. But
We love what we do.
But no, the last mastermind that we did was in Put in Bay, and that was in July.
Yeah, Eric
spoke.
July.
Yeah.
Yeah,
And he was
I do.
he was like the premier speaker.
Yeah, I do remember the whole protect against the downside, even
Yeah.
with that whole conversation, because that's, man, I feel like
Risk management, man.
it is. That's
Eric is
what.
good at that. You have to be in your line, I guess, right?
When you put that thing out there where it was like, and I forget, it was like the 7% versus the 9%, and then you looked at it over a 10-year period, and
Yeah,
I'm
that
on
was
this long-term
wild,
train,
actually.
dude. I've
Yeah.
always been. I'm a long-term thinker. I think that you need to be long-term invested in anything that you do. But when you looked at it, you're like, well, this is like 7%, 9%. Like, everyone's eyes kind of opened, even though that they were a little hungover. But like, everyone's eyes
Well,
opened. Like that was pretty incredible.
Yeah, and can't do a complete justice without showing it, but I'll summarize it in that you have to guard against volatility, and the example I'll give is if you had $100,000 in whatever, name your investment, and it dropped 50% in value, you'd be at 50,000. We can all do that math, and then you might just kind of think in your head, okay, fine, I just got to make 50% the next year and I'm back to even.
Nope.
No, if you know fourth grade math and you actually do it,
Well, we don't.
50%
You gotta double
of
it.
50,000 is 25,000. So you only get back to 75,000. So you actually have to make 100%, which is doubling your money from 50 to 100, to get back to even. So you can actually have a sequence of returns that if you just do an arithmetic average, a simple average, maybe you get 9%, maybe 12%. But the volatility actually makes you have a worse outcome than a more stable portfolio that only averages 7%. And again, can't do them. I'd have to show you.
Yeah, but
it's about
freaking
it's
wild.
winning by not
It was
losing,
wild.
and
It was
I'll
wild.
put that to kind of today's times. And people are saying, okay, everything's down this year. What do we do? Right? Well, when it's raining is not the time to buy an umbrella. You want to buy the umbrella before it's raining, right?
Oh my God, I love
did
that.
And so-
dude, I did that in New York one time.
What's
Yeah.
an umbrella?
You know, if you want to buy a
See that? It says make it
snowblower,
rain for a reason.
if you want to buy a snowblower in December, do you think you're going to pay more for it? Yeah, you want to buy it when you don't need it.
A generator during
And
an earthquake.
you know, when I was in Jamaica at that event, you know, we went off campus, whatever, off the resort.
We'll say,
For those of you that haven't been to
we're
Jamaica,
going to say
you go to
off
Tab?
campus.
yeah, I went to TAB.
Oh,
yeah.
hell yeah.
He was
The-
a sponsor, man.
Yeah, you the speaker there.
We were at
This
this
guy's
big
the man.
resort in Jamaica, and if you know anything about Jamaica, you stay on the resort.
Hey, you guys didn't.
And
Oh, we're gonna be honest.
but we wanted to be adventurous, and
Oh,
fortunately, my wife was up for it. So you know what? We got a free afternoon. We're gonna go walk into town, right? There's big gates and everything. Before we left the resort,
There's a reason for big
there
games
was some
usually.
clouds. There were some clouds out, and I'm like, you know what? You know, actually, Steph, she's like, we should probably bring umbrellas.
She's been around you too much. She's like,
Yeah,
I'm
she's
gonna
like,
hedge
we
my
should
bets.
probably bring umbrellas.
She's your cushion.
And I'm thinking, oh man, they're heavy. They're going to slow us down.
I hate
We got
umbrellas.
them right,
me
and
feel less
and of
manly.
course it started pouring. And the town, by the way, I think I got offered 4 different drugs by 5 different people in 6 minutes.
He's like, this is not good.
You know, right after I got into town,
Not a good
and
return on time.
it was pretty scary. And we actually had to use the umbrellas to fend people off.
Is that where my investments went to? You
That's
said they
where it
dropped
went.
after
Yeah,
Jamaica.
we
Kidding.
invested in some cannabis down there, but
Yeah, some of our
Lot of-
watchers
that's
might
an
want to know
investment.
where
It's
they should go to find that.
Cannabis.
but it
Lot of
rained.
cannabis.
It started raining,
Yeah.
and we had the umbrellas. Right. It doesn't mean we didn't get a little wet, but we didn't get soaked. And so when you're investing your money, it's going to go up and down. But if you own high quality investments, and what I mean by this is,
Yeah, what's high
this
quality?
was a year ago and 2 years ago when everyone was talking about, oh, I want this IPO, this SPAC, this crypto.
That's SPACs, man. Oh my
That's
gosh.
the time.
Why are you hating on
I
it
never
so
owned
much right now?
any of that stuff because I know that could end badly. So you know what? Just buy good quality companies that pay a dividend at reasonable valuations. Those companies this year are down, but only about 12% instead of 25%. Now, it still
Or
sucks.
crypto, which is 95%.
yeah.
What about day trading though? That's a form of investing.
So
I day trade.
you're actually pretty good at it. I'm gonna give you honest.
Dude, can we not give him the
Thank
props
you.
that
Thank you.
he should
Thank
deserve?
you.
But I don't want to do this.
Yeah. So
Let's not do this.
Bobby Shorts.
Someone asked me the other day. They're like,
Dude,
what do you think of the market? And first you have to clarify which market: the real estate market, the stock market.
Yeah.
I assume you're talking
Yeah.
about stocks. So I'm going to give you a long-term answer. If no one wants to hear that, and then we'll talk about the short-term. So I'm going to have to put my glasses on for this, which I'm going to already show my age when I give you these
Oh
dates.
my
The
lord.
camera makes you look
So-
younger. You're good.
Here we
Better
go.
Frank.
Let's-
Here's what I think of the market. When I graduated college in 1997,
Oh, we're great now then.
the Dow Jones was 7,000. Okay?
Okay.
It's like 5,000.
When I started in the financial advisory world at a company called Edward Jones and was cold calling and knocking on doors in 1998, the Dow was 9,000. In 2006, when I left Edward Jones and went to Wells Fargo, the Dow was 12,000.
I don't know where we're going with this.
In 2009, right after the financial crisis, March 8th was my birthday. March 9th, it bottomed out. My first son was born a month after that. The Dow Jones was back to 9,000. 2012, it rebounded to 13,000, and we bought 2 acres for our eventual dream house that you've been in.
It's a sweet house, by the way.
In 2015, our second son was born, Beckett, and the Dow was 13,000. 2019, I left Wells Fargo, started
that when you left?
Peerless Wealth.
Oh, yeah.
It was up to 26,000.
How about now?
COVID happened. It went all the way back down to 19,000. Today, it's at 30,000. So in my career since college, it went from 7,000 to 30,000, which is over a 400% increase.
Whether you have ups or downs.
If you average that out, it's 7% a year. The indexes don't include dividends. So you add a couple, 2-3% dividend, you're at 9 to 10% a year on average. So to me, the market has been a very good place because I've had money in there a long time, and and I haven't had to fix toilet. No offense, I haven't had to fix toilets.
No.
I haven't had to deal with
You're good.
tenants. I haven't had to, go without rentals or get sued or whatever it is.
Kick
It's
out,
very
kick out
passive.
crackheads.
We can say get sued.
So here's what-
it happens.
Yeah, so here's what I have not been sued, at least not by any clients. So
my turn.
we've gone from 7 to 30. Now I can say, oh well, let's go short term. It was at 35,000. So we can look at this 2 ways. I've lost 20% or I've made 400%.
It's like real estate.
Here's
We're talking
the
about
thing.
how time helps you, right?
If you bought a house for 300 grand, and 5 years later, when it was springtime, the sun was shining, the grass was green, there were unicorns and deers jumping around in the front yard.
Did you buy
I like unicorns,
Yeah.
tire swings,
Tire
white
swings.
picket fences, and dogs named shit.
And it happened to
Should we
be
do that? I'm good.
and
Would
you
guys go off
called
campus to Jamaica again?
and
What's
you
going on?
called your favorite appraiser right after you took him out for drinks the night before. And you said, I want an appraisal on this thing, and it
Do
was
that?
and that 300,000 was appraised at 500,000, right?
Yeah.
It's 200,000 again. You wind up selling it for 480. Did you lose 20,000 or did you make 180?
It's all on how you look at
Exactly.
it. Though, right? It's
I look
on-
at it glass half full.
But
But if you measure things from the peak, you're going to be wrong 364 days out of the year.
I think 90% of people just
Yeah.
don't think that far.
they just need
It's
to think
hard.
long
It's hard.
term. Like
Long
they have to
term,
think
yeah.
over a 10
And
year
when
time
that was a
20 year,
25-year time period,
It is.
and we had wars, we had banking crises, we had recessions, we had housing crisis, we had
You had
pandemics,
9/11 in there.
we had 9/11, we had government shutdowns, we had
Y2K.
Democrats, Republicans, we had Y2K, and
You
people
even had a libertarian or two.
people
in there. I mean,
people
damn.
have there's a huge behavioral thing called it's called recency bias, and recency bias is we place more weight on what's going on right now or the recent past more than the historical, like long-term past. And I'll give you an example. Most of you can probably remember what you had for dinner last night.
I didn't eat dinner last night.
Yeah, I remember.
Okay.
Yeah.
Fasting. Good.
Yeah.
You remember what you had for dinner last night?
Shit, what did I have? Turkey
In your
meatballs.
meal plan?
You didn't have
I know.
no turkey meatballs.
Okay.
I didn't make them.
I had mom's cooking.
But I
Okay.
bought 'em.
All over the place.
Oh, yeah,
you
you
missed
did.
out.
Turkey
my bad,
meatballs,
my
and then I
bad.
had
Tell-
a cucumber
okay,
tomato
all right.
salad. Yeah.
I will tell your mom sorry. I'm gonna come over and
Say
eat
it on
her
camera.
food.
What'd you have, Bobby? What'd you have for dinner last night?
Mama, I'm sorry. I will be over to get some meatballs
mama
or some Asian
Made
cooking
a
or whatever else
Adam
you
last
want to
night,
make for me.
actually. Adam wanted these like really
Probably
spicy
amazing.
shrimp and everything that I had for my birthday.
Yeah.
Remember that one that killed you almost? That shrimp on my birthday?
Oh yeah. the
Yeah,
food
Adam
poison-
loved that. No, not food poisoning. The shrimp on my birthday at the fireproof. My mom made the shrimp and it was really spicy.
Oh, that.
Yeah, and your
gosh.
face just went like you got
Yeah.
more than a 10.
Yeah.
Yeah. So she made that and all this food like lamb, goat, shrimp,
Goat.
chicken, right? Like all this stuff.
How
Yeah,
many
but people
animals
back
did
in
she
Jamaica.
slaughter?
That's what Adam wanted. So our good buddy Adam's going to DC. So
So everyone remembers what they had last night. Do you remember what you had a year ago last night?
Yeah, not a shot.
Hell no.
Listen, I'm not on trial here.
no,
Okay? I'm
you're
not on trial.
Okay.
What if I told you I did?
So then I would be impressed, and
I'd be
I
lying.
would buy. Then my whole thesis is gone. The point is that there's a lot of shit that happened in the last 25 years, and it was a lot. It seemed a lot worse than it was happening when it was happening than it does now when you look back. That's what recency
Well,
bias
it's
is.
that tough
So there's a
time-
lot of
tough
shit going on
people
right
watch.
now. We got inflation, we got interest rates that are going up, but we've been
So-
through a lot of
so
stuff before.
let
It
me ask you
does
this.
that. It ebbs and flows.
Let me ask you this question, man. So for people that are literally trying, I don't want to say trying to survive, but let's say someone that is, man, I'm doing well. I did really well February this year, March of this year, but
course you
I'm
did.
feeling the pain.
For a friend, asking for a friend.
I'm not asking for a
kidding.
friend. I want to see what his response is.
I assume most
So,
people were in that.
Again, and we have different mindsets
Yeah.
and investment philosophies. So, those people that need the cash flow today, even though they're not long term invested, what would you tell those people, man? They need the money today.
So you're talking about someone that is like a W-2 employee or someone that
Yeah, I'm talking
Like,
about. I'm
yeah,
talking
they can't
about
wait.
your.
Yeah.
I wouldn't even say upper to middle. I would say your middle class
Yeah,
person that saw their 401k just
Yeah.
get
Okay.
wiped out.
Yeah. I'll definitely speak to that. So, again, what's happening now feels a lot more significant than when we look at other declines that have happened and that have always rebounded. So, if you're putting money in your employer-sponsored 401k, average Joe W-2, likely getting a company match. In fact, the average 401k matches 50 cents on the dollar for your first 6%. Now, some people might not understand what that actually means, so I'll put it in. So let's say someone makes, I'll just use $100,000 a year. You put 6% of your pay in, that's $6,000 a year. The employer matches 50 cents on the dollar on that. That's $3,000 a year. That's a 50% return before any investment gains or loss. I always tell my clients, start there, because I'm a nice guy, but I'm not going to match your money 50%, right? So even if
we can't either.
Yeah, so even if the investments drop 20, you're still up because of the match.
Yeah.
But they never stay down forever. And what's happening is, if people understand what long-term investing is, and you always get these down cycles, and you have 5 years plus, that's the time when you're buying more shares and you're actually buying lower.
Averaging down.
Yeah, if your favorite whatever food went on sale at Walmart, you'd stock up.
Costco.
Right?
Costco theory.
So like
You're saving money,
so
so
then why do
more.
people get scared when it's because it's their money and it goes down and it gets emotional, but you want to stock up. You want to, Warren Buffett always said, buy low, sell high. You know, we know we're lower than we were first of the year. Now, yeah, there's some inflation, corporate earnings, maybe they've slowed down a little bit. We can go on and on. But these are the times for long-term investors when you
With good companies.
good companies.
Because
Good
they're supposed to
companies
make money.
Yeah, is Costco going out of business? Is Procter
IBM.
and Gamble going out of business?
On the thing?
Sponsors needed.
Yeah, it was sponsors
yeah,
needed.
yeah.
Already. Yeah, there we go.
So you own good businesses. You know, we all got to live our lives. Imagine all the money we throw as just consumers every day at these publicly traded companies. Coca-Cola.
You don't even realize how many
Monster,
companies they own.
Procter and Gamble, Abercrombie, whatever the hell you're wearing.
Yeah, what are you wearing, bro?
Lulu.
Damn, he
Yeah.
called that. Dude, called that.
Is that, you wearing Lulu? You got Lulu?
Nah, I ain't Lulu. I ain't that bougie.
Yeah.
He's like,
You got Lulu? Damn.
So do you see more people going? So when stocks dip, do you see people pull out and try to go into something riskier, or
So-
do you see the opposite?
Not my clients, because they have me as their advisor,
Right.
and
Yeah,
I
you
guide them
handle
not
all
to.
theirs.
But if you look at the statistics, there's something called fund flows, and they look at how much money, and these numbers are in the billions, flows in of equity mutual funds or into bond mutual funds. And it's pretty uncanny. The most money flows out of equity or stock mutual funds near the bottom. So the average investor actually sells at precisely the wrong time, and it's because emotions. It's because of panic. It's
Isn't that crazy?
It's how we're
It's
wired.
crazy to me
It's how
that
we're wired.
markets just repeat so much because of human psychology. I wish there was a way to understand how it's always so.
well. You can look at there's something called the there's some like confidence indicator and bullishness sentiment.
Sentiment,
You look
yeah.
at sentiment
Public
First
indicators,
size, relative strength,
and
sentiment,
it's a
or wrong.
people have the most historically have the most negative sentiment or the most bearish negative on markets near the lows, when that's precisely when they should be buying, and it's temporary pain and they
And
feel that.
so Sam Zell, for
Yeah.
instance, okay, bring this dude out of the woodwork here. This dude, real estate investor. When you
Yeah.
look at like real estate in general, you want to be a millionaire? Easiest path to do it? Be in real estate. Well, guess what? You're probably going to get stuck there for the rest of your life, because
Long term.
it just takes so long to be able to scale this business, because there's so many people that need to be a part of this process. However, this dude was, I think he's worth like $8 billion,
Yeah,
something
he's-
crazy. But he's always bought and sold at the right time. And all he does is just think about, what's everyone else do? Oh, everyone's high
Overall
right
picture,
now.
bigger
I
picture.
sell. Oh, everyone's low right now. Well, I buy. And that's all he does. Like, and I'm
that-
oversimplifying it, but like, he's always bought and sold at the right times because of what he just feels.
So does that emphasize timing over the duration?
I
or
don't
is
believe
it-
that, dude. He's one of the few people that is timed everything correctly. I mean, when he sold 2006, I mean, he could have got another.
That's self-discipline.
Because
Because like a lot of times people see things going up and they get greedy, like, oh, I'm not going to sell now. It's going up, up, up. And what happens?
They
Shit,
buy the
I
houses
sold.
at the top of the market. You know what I mean?
Yeah,
And
but
the
it's
media,
self-discipline.
the media, especially the financial media, doesn't help. And the analogy I'll use is the Weather Channel, right? The Weather Channel does not get
Are you saying the
paid.
Weather Channel in Florida?
No, just the whatever the
Just
Weather
one
Channel
minute.
is. Yeah. The Weather Channel doesn't get paid to make accurate predictions. They get paid based on how much advertising they sell. That's how. That's how.
I mean, that's
all TV channels make money.
That's why they put those girls in the booty shorts up there.
Right,
Yeah.
and it's also why there's the storm of the
What channel are
century.
you watching?
I watched,
It was like
watched
a
the
Mexican
strict
or
Weather
Spanish
Channel.
one or whatever.
with
Yeah.
No booty shorts, by the
The
way. Just wanna throw that
Cinemax
out there.
Weather Channel.
Were you allowed to watch that?
Yeah,
No booty shorts for me.
that's why there's the storm of the century every month because
talking
they
about
want
the
to
booty shorts
get.
or the weather?
They want to get.
I mean, the Weather Channel's got to get some ratings.
Make it
right?
rain.
Miami Beach.
Can we get the Make It Rain done?
Make it rain.
That would be
Dude,
awesome.
you don't have the cash for this thing yet?
I got cash in my wallet. Put it in. Let's go.
You got
Let's
like
go.
you,
Let's
you
go.
have ones on you literally right now.
There's
No, I got
way,
hundreds.
bro. There's no way you have dollar bills in your pocket right now.
I got bills.
Hey, load it up.
It's Louis Vuitton.
Load that shit.
Listen, that's how we'll end it that way.
Dude, is that
the
a
rent from-
casino ticket?
Is that the rent?
Social Security card.
Is that the rent?
I had to go to the BMV.
Grassmere?
Let's make it rain. Is there batteries in it?
No,
Dude,
hey,
it's your gun. What are you talking about?
Well, you're supposed to put batteries in it, bro.
No. We'll end the episode with it.
Where's bartender Nick? You got some batteries?
He ain't bartender Nick no
Oh,
more.
is that?
Real estate
They're all
investor
already-
Nick.
See that?
Oh, that's not the
Make
funny
it rain.
money.
Make it rain. You're making
It doesn't
rain.
Hey,
work.
I got paid to be semi-accurate, not all the time accurate.
Well, you're not even anytime accurate.
Watch it be
right
like a
now.
taser.
Oh my.
That works.
That is like worse than funny money. That's like bad Monopoly money.
How bad did you hate all the crypto booms?
I didn't hate it. I just didn't understand it, and I
JPEGs.
It's not your realm.
I did get.
NFTs.
I just think that when you evaluate an investment, like me as a fiduciary, when I'm investing my clients' money, I can't invest in something that's doesn't have
Doesn't even have like
earnings,
annual
dividends,
reports.
cash flow
Right.
reports. I mean, what was it?
It's too high
Kim
risk for
Kardashian
what
that just had to settle because she promoted.
I saw that.
She had to
I
pay
think it was
like
her sister or something.
Chloe
Either
or
one.
yeah.
One of one.
They had to they pumped up. It's basic. It's pump and dump stuff, right?
Yeah.
You pump stuff up
I mean,
on social
stocks
media.
have that too.
I mean, it's funny you don't see that shit on Instagram
Wolf of Wall
anymore.
Street,
Now that
right?
it's-
No, you
Now that
don't.
it's out, you don't see it. And
That's
like,
funny because
it's
all I saw for the longest time was NFTs, and now I don't hear anything.
Well, 'cause
here's
prices
the
have
thing.
dropped, you know, that's the
Here's
whole
the
thing.
thing.
Yeah,
Now's the time that you buy it if you think it's worth it.
And Gary Vee was like, man, I made, I think it was like 90 million off of NFTs or
What?
something like that. And then like you don't hear him, like you just don't hear about it anymore. And I'm just like, like
It's not
yeah,
trending,
I
that's
believe,
why.
I believe in the technology. I believe
Exactly.
in blockchain.
Yeah.
I believe in all this stuff. I just don't believe in where it's at right now. And the timing in the marketplace has to match up in order for it to be a decent investment.
well, here's
And not to say I'm not investing in crypto,
Yeah.
by the way,
Yeah.
because I definitely am.
Yeah. I remember you give me a payment in crypto.
Oh, you know-
in the wallet.
and I think it's
Your wallet ain't worth shit.
I have a teeny weeny bit of it, just kind of like fear of like FOMO, like but
Yeah,
that's smart.
It's one of those things that it's impossible to value something that doesn't have earnings, dividends, or cash flow. What it becomes is it becomes like an art or a collectible,
It's unregulated too.
and that too.
I thought he was
But
gonna say
Hope.
yeah, I mean,
It's your destiny.
currencies are. We can invest in the British pound or the yen or whatever, and we might be right, we might be wrong, but there's no underlying. I'm getting way too animated for this.
Yeah.
So
Luckily, it's only water.
yeah,
You're good.
it's monster actually.
Oh,
But we can. It's very hard to value something like that, And they say, oh, they're not making. There's only so many Bitcoin that are going to be mined. Okay, well, Beanie Babies were once a fad in the late '90s.
that was a
There was
fad.
only, people forget it's recency bias. People forget there's only so many of those, right? There's only so many Jose Canseco rookie cards, right? I get it.
for sure.
You bought
but,
a card, didn't you? That was
That doesn't necessarily mean, especially when we talk about technology. I mean, this phone is way better than a phone 10 years ago.
It's better than
So
a computer 10
any
years
sort
ago.
of blockchain technology that makes itself into a token or
Right.
a coin,
It'll be phased out.
Exactly. It could be way better than a Bitcoin
That's why
or
they say
whatever.
you have
So
to invest in ones that weathered this
Yeah.
storm and have been around
So-
for a while.
I would rather own, I don't know, maybe companies that use blockchain to increase their efficiencies, whether it's a Visa, a MasterCard, maybe they
smart.
can get onto it, and You guys know how the San Francisco 49ers got their name?
$49.
Because
Shit, someone just
Gold
told me
miners,
this
right?
story.
the gold rush.
Gold
Yep.
rush. Yeah.
1849 gold rush in California.
And you don't want to sell the gold, you want to sell the shovels, right?
Yes.
Yeah, there you go.
There's a few
Houses.
people that got rich, but most of the people that mined, they struck out, right?
He was like 10 years old in 1849.
I was 12.
12. Put your glasses on. Okay.
My parents owned a pick and shovel shop. But the people that really made money sold to the miners, the picks and the shovels and the pans and that kind of stuff.
Love
So there's probably money there, but to just invest in, I've always told clients, I have a bias toward companies over currencies.
History, too. I think you have to have a nice track record in history for it.
I'm writing that down, by the way.
Companies over currencies.
Companies
Yeah.
over currencies.
You were probably grinning the past.
We just signed, dude. I like that, actually.
Well,
That's
it is
6 months.
frustrating when, like, I'm sitting here with my boring dividend shit, making my 15%, whatever, feeling pretty good, and then dude that, like, still lives with his parents is...
And his parents putting pebbles in his mom's basement, playing Fortnite, making 4,000% on a Tuesday.
Exactly. Yeah.
You're like, yeah, this is wrong. But is it the new way? Is it the new way of the way that things are? Or is it?
Is it another
Is it just
pyramid
another?
scheme?
Is it just another thing?
Yeah.
Well, I think what happened is a couple of years ago when we came out
I
of
think it's a
COVID...
combination of both.
Yeah, and I think it was the environment we're in too. We were in, especially because 2 years ago we were coming out of COVID, and
People were
no
looking for
one
stuff.
knew. Well, people were home, and no one knew where the disease or the pandemic was going. So the Federal Reserve cut interest rates to zero to stimulate. The government issued a bunch of stimulus checks, PPP money, refund stimulus checks. They paid people
Impact
sometimes 3 times as much to stay home, right?
They do?
So all these people had money and they were staying home, and there was too much money in the system,
While we were still
and they
working.
latched onto it, and it was like, okay, sure, the economy needed a monster, right? But the Federal Reserve gave it 3 cups of coffee, 4 Red Bulls, and a line of blow.
and some pre-workout.
Okay.
Did they give them some strippers too,
I
though,
think
you
they
think?
did. Yeah. And so
Vegas
it
strippers?
overstimulated
Vegas strippers?
things. Yeah.
Or
Overstimulated.
LA strippers?
They did. They
I don't
overstimulated
know
us for
very
sure.
well.
Comment?
Yeah.
Okay.
You know what? We'll even give you free money. Screw it. Oh, we're out. We'll print some
That
more.
was
Here
the
you go.
topic that was off limits. Was
This is pre-marriage, okay?
so then they put too much money in the system, right? And now we're suffering a hangover, withdrawal, whatever you want to call
Yeah.
it. Now they're having to backtrack, and they're having to raise interest rates to cool off inflation.
They can't balance it right because it's too much
And
weight.
here's the thing. I mean, whose definition of break is it really, though? But do you think it's going to break?
Well, like put on the brakes or
Fine,
break.
I'm saying, take this cigar
Well, I'll give you that one. Break this
and
one.
break it.
I think they've done
They broke it
enough
already.
to slow it down, but you have to wait for the effect. When
Doesn't happen
they,
right away.
when they after COVID or during COVID, they printed money, they cut rates. They also printed money. I forgot about that. And they cut rates to
Yeah,
zero.
there's
They cut rate. Inflation didn't happen
Till now.
till now, right?
Oh, that's pretty wild.
Everyone's having
So
fun.
think about
I'm
the
spending
lag.
Money. I'm
Think
spending my
about
rent
the
money on shoes.
1 year lag, at least 1 year lag, maybe 2. So if you're raising rates, destimulating, you have to wait. There's a lag. You've seen it with housing. People can't get the same house for the same payment.
Yeah.
It's huge, but it doesn't happen overnight. It's gotta.
Dude,
Nick, hold on, Nick. What'd your neighbors say? Remember you were asking them? They were like, "Oh, I get paid more to sit on my ass off."
Oh yeah, talking about Impact, she said, I have the money to pay rent, but why would I? Impact has all this money, they can just pay the rent for me.
So it's the COVID relief.
Who?
They just
Impact?
Pay? Yeah, it's
Impact.
COVID
What
relief.
the hell's that?
I don't know. I want to call them though if they're going to be paying our tenants
Yeah.
rents.
Yeah. That's
Yeah.
wild though. I mean,
So-
the people would rather sit
What
on
is
their ass and
Impact?
collect these checks.
Impact is it's payment from just
COVID
the
relief
government
fund.
assisted.
Yeah.
Yeah.
I want
Yeah.
impact
Bro,
in
can
my
you
life.
say-
Yeah,
you
it's
say
that
what you
student
said
loans,
2
whatever
years
you
ago?
want. Just if you're a
Wow.
millennial, just everything's
They
forgiven.
gave $7 trillion. Like that
It's
whole
just-
spiel, dude. Because that
Yeah.
you said it in such a way
Well,
that
it's
made
just-
so much sense.
It's just breaking things down from like
I mean,
a granular
just say
standpoint.
that. Just say the line. Say the line. Please.
It's just like, look, say there was $10 trillion in circulation,
Seth.
Yeah.
Okay,
right?
keep going.
And then they printed and sent out another 10 trillion. That makes every dollar that was there before it worth 50%.
Well, you know,
In theory.
Let me paraphrase from what you said. You said they printed $7 trillion for free
Just out.
and gave it to people for free,
Yes.
and they printed
For
it
no
for free.
goods, no services.
Like you
There's
can't,
nothing
you
back.
just can't do that.
No.
I tried copying some money in my basement once and took it into school. They didn't like it.
Yeah, bro.
So I did this. I remember I was in,
that. We go to jail.
Yeah.
I was in like 6th grade, and this was back when they had arcades. So I had to ride my bike to the arcade, right? And they had a, the change.
Yeah.
It's back in East Lansing, by the way.
It was back in East Lansing, Michigan State University. It was a place called
Is that where you're from? Where? Michigan?
Pinball
Get the
Pete's.
hell out of here, bro.
Right
You see
over
this in here.
You look,
I
you
was
look at
a
this.
freshman
It's
here.
over.
And
The show is over.
I didn't have that much money. My parents did good, but I didn't get a lot of extra. I want to play video games, so I photocopied a $5 bill. I'm not going to get in trouble for like counterfeiting them.
No,
I
think we all did that when we were
I think
younger.
there's
Statute of limitations.
Okay, I figured.
Yeah,
Yeah, I was
good.
like 13, and colored it in with green pencil. Colored the whole $5 bill. It took me like an hour. Cut it out, copied it,
That's awesome.
cut it out, put it in the Pinball Pete's, and it worked.
What?
No shit.
It worked.
What?
Yeah.
All right, so you don't
That's
feel
awesome.
so implicated.
At least I got to play video games, but that's basically printing money. So
What-
that's why we have an inflation problem right now, because
100%.
what I did when I was
Because of-
13 years old.
because of
yeah.
Good job, buddy. You printed money.
I used to do that. I did that.
I got
with, like,
$20
No, I
extra.
I did that with baseball cards or like Pokemon cards. I'd print out the most
Pokemon
popular version. Listen, hey, say what you want. I'd print out the most popular one and I'd tape it onto the front of a shitty one. And literally just then I'd like be playing with Babe Ruth, right? But it was just a fake.
Dude,
When that shit took, when the $5 bill went in the shade,
Oh,
it felt
you were-
like I won like the lottery.
You're
Like I was there with a
sweet.
buddy. I'm like,
That owner of that arcade's gonna be like, Eric Thompson. Oh, I remember him.
Let's be honest. The worst thing I did is I used to be a baseball card guy and a football card guy, and I even had an Eddie George autographed rookie card. That
Who'd
I
you sell
got.
it to? Copied and sold it, didn't you?
I didn't. But I learned real quick, and I was like 11, right? And I didn't know right from wrong. So I was like, man, I can get $100 out of Eddie George rookie card. Dude, I'm gonna start signing all this shit. So I got good at signing cards.
signed Eddie
Dude,
George's
my
signature.
dad beat my ass. Beat my ass. I would have people coming to the house and like trying to buy some rookie card that just got
They
signed.
didn't have the internet
I'm
to
like,
verify it then.
Dude,
so
they didn't. They didn't. This
Dude,
is pre-internet.
I copied my parents' signature on a report card, and that got me in trouble. I get in trouble for copying stuff.
Dude,
Yeah, you're not very
everything
good
I've
at it,
ever
though.
done.
what
I've
they do?
got.
Not spice up your
By the
dinner
way.
that night.
No, dude, I got like a C in class, and I had to get like a
My dad
signature
made me
for it.
return the money to
They
one
didn't
of the
put
guys.
spices in his dinner that night.
Dude,
But-
you know,
No, I'm
You
making
can't-
parents
you can't-
out.
you
But that stuff hurt, man. The little
Listen, bro,
that
you
soup handles
can't
on your
cheat the
hand, and
system. You can't cheat this.
I have a buddy who actually he goes to these auctions and they'll put in like 10 people will put in $10,000 and it'll be like $100,000 baseball card, and then they'll pull one of 10, or they'll pull with people and do it.
wait, say that again. So 10 people buy a card together.
Yes.
And one of them gets to keep it.
Yes. And so he'll regularly do it like they'll put $1,000 in and then
That's
they'll
just a
auction
raffle.
off a $10,000 baseball card.
That's a raffle.
But like he's had his card collection. I'm not gonna name names, but
So you're
he's had
basically like buying over time. You're buying shares.
Yeah.
Yeah.
he's had his baseball collection appraised for over $1 million.
Oh wow, that's crazy.
It's not, but they're
Yeah,
but
what's your
again, it's
baseball or
like the
football
same
card
thing.
worth?
It's just
Yeah.
a card,
I
right?
sold all my football and baseball cards to be able to
You
buy
bought one
my first
recently?
I
house.
still have them. Do you remember
Yeah.
Trapper Keepers?
Oh yeah.
Yeah.
I still
saw
have
mine.
mine at Trapper
Same.
Keepers.
But so I bought a Tom Brady
it's the
rookie
stick.
card when
How'd
this
you
was
pay
like
for it?
the thing, right?
How'd
Back
you
to
pay for it?
NFTs and cryptos.
How'd you
and,
pay for it?
You know, all that stuff. But yeah,
What's it worth?
I'm
What did you pay
a
for?
35% owner
I love that there's
in a
percentage.
Tom Brady rookie card.
He's got a syndicate going.
That's why he's so emotional. Whenever, are you retiring or not? I want my card to go up.
All
I
of
didn't
you.
put that. You didn't
Okay.
tell me about that when I
got a
talked about your assets.
Well, listen, it's on my personal
I need to
financial
do.
statement.
No, it was
okay?
not on the one you gave me.
Dude, when
That changes everything.
You're in a different tax bracket now.
so
Thanks, Tom Brady.
especially after last week, Tom Brady. Yeah, like I saw Tom Brady at the Steelers game, literally yelling at his team.
Oh, that was great.
You were yelling at him.
Yeah, and I was like, and it was like I was conflicted because like I'm a Steelers fan, but then I'm like, Tom Brady's rookie card's got to go.
I want him to
I got 15 grand in this thing. Like he's got to
There's
be
your
better.
price, 15 grand. Add that in.
Yeah, we paid $37.5 for a Tom Brady rookie card that, we were thinking, this thing's gonna go up to 80 grand. But I did buy it right before the Super Bowl that he won.
Okay, so it's
It
probably
just
out, yeah.
didn't.
So if it don't go up
Who
then, it's going
physically
up
has the
now.
card?
That's true. You're actually
what happened was
Fire pit. The fire pit.
So we got this guy.
It's in some guy's shoebox.
Hey, it's one of the guys in one of my masterminds. I have a promissory note on the card. So does my partner on the card.
This is gonna go bad.
And
Some guy's gonna take it to the Caymans.
now he's getting divorced, half the value.
bro, I got
The ex-wife has the card.
I have a promissory note.
50%.
I've got a promissory note.
I got one of those too from
Oh
you.
yeah, try collecting on that.
You have a promissory note.
Take that to court.
You have a lien on the card.
I do.
You don't want to bend it. You don't want to bend it.
I do. I swear to God, I got a lien on this Tom Brady rookie card, bro. But I'm conflicted. I'm like, yeah, Tom Brady's got to do well, but I'm Steelers fan.
Didn't he get
like,
some massive ESPN contract or?
250 mil, something
Jesus.
stupid?
Oh, that's insane.
It's insane.
It is crazy
Well,
how
I mean-
people FOMO out of
Yeah.
all these like collectible things.
Well,
People
stuff-
were saying Beanie
It's
Babies
ego
were
too.
selling
People
for,
like to say, "Oh, I
But through
I own
times,
this, I own that."
there's fads,
no
right?
one makes money, not what you.
Eric, isn't that what it is? And so there's like through time, you have trends and you have fads, which will always
Yeah.
come and go. But overall picture, that's why you're always safe.
Well,
True.
you know,
You know what's funny? Because you said it about the pick and stuff. You know who was making money during this like baseball card boom was the companies that were doing the
making
grading.
them. Oh.
Yeah.
Yeah.
Like
Makes
the
sense.
Beckett grading or whatever, they were making money hand
dude,
over
yes.
fist.
Because they were creating. They were
And-
shovels.
and-
They were
well,
the shovels.
And they were doing all this stuff, right? They were
Yeah.
bidding up other things, and then I don't know.
They're probably
Yeah.
Ponzi scheming.
No matter what's going on, you can make money somehow.
well, and whatever's the fad or what's hot, like nothing can stay consistently hot. So I'd rather be consistent than hot.
What's the next hot thing you think?
I like that.
Ooh.
That's
You've had
So
a
is
few
that
good
across
sayings.
all things?
write that down.
Is that across all
I
things?
think yeah, you know, like diet, exercise, absolutely. Yeah.
That's true. You don't want to be the one.
Is there a
one
fad?
that-
Are there any magic pills that like beef you up and lean you down like instantaneously? Everyone
Not
wants
really.
them.
No.
No, you gotta like block and
Not
tackle.
even the
You know,
good
you gotta
stuff.
block and
Yeah.
tackle, and it takes time.
For sure.
What's
And
up?
so I had a meeting with the team today. Every single team member, I had probably a 15 to 30 minute meeting. And I said, the worst thing, based on our core values, the worst thing that you can be is inconsistently consistent.
Or
Like-
consistently inconsistent.
That
Or consistently inconsistent.
Yeah.
I'm sorry.
Yeah.
Sorry. I had like
I've had one.
I had 11 meetings, dude. I had 11 meetings. So it was a
I'm
lot.
inconsistently consistent.
But to be inconsistently consistent, like, damn, like if I don't know what version of you I'm going to get, like that's a problem. You know what I mean? Like being dependable means that I know exactly what I'm going to get out of you.
That is true. Listen, Ice Ice Baby was probably the best song ever made.
Still
But
is.
do you want to be Vanilla Ice or did
Yeah.
you want to be
Dude, I'd want to be
the
Vanilla
Rolling
Ice, so-
Stones or
Yeah.
whoever, right?
Yeah.
Putting out average
Everybody
songs.
listens to Baby.
That's a
Right?
good. That's a good one.
It's
His name's
like-
Rob, by the way. See, I know that because I still want to be.
Well, doesn't he have a
Rob
housing
Winkle?
show now? Doesn't like
Yeah, he did have a house flipping show.
Doesn't
now.
Vanilla
Like,
Ice
before
flip
that,
houses
maybe not
now?
that.
No, he doesn't.
Yeah, he did. Yeah.
We're getting them on. Let's get them on.
Dude, we should get Vanilla Ice.
We know him.
Yeah.
We can get him on actually.
Yeah.
Oh
He used
shit.
to hang out in Fort Lauderdale. He lives in Wellington, or he had a house there. That's where he was doing houses.
Yeah, he
All right,
was.
well,
He was
let me-
doing it
yeah.
for it. I saw one of his shows once.
We used to run into him all the time. When I lived down in Florida. He'd always be out hanging out. He's a fun guy.
Let me recover then. Vanilla,
get
you
him
know,
on the
Ice
next
Ice Baby is still
podcast.
one of the best songs ever. So,
Thank you.
know,
There we go.
There we
Agreed.
go. Recovered.
Agreed.
Wrong analogy on that one, bro.
Right analogy.
You don't want to be Bill Cosby. That's what you don't want to be.
Jesus, that took a turn.
Oh my gosh.
How did we just get to Bill Cosby from safe word?
Eric, I do got to say this, man. The fact that you brought up that stuff on your paper just now, that
You've
was
been
dope.
through it. Yeah,
That
you've
was
been through
dope.
it, though.
That
It's
was
like
dope.
factual.
You've been through it. And that's
Yeah.
complete facts.
And that's what you want to invest with. Something
It
that's been
just
through it and
yeah,
weathered
it
That's
takes
the
a
whole thing,
while,
too.
and it's not like
It's not flashy.
No,
it's not
no,
pretty.
but
Yeah.
it's consistent and you got to do. But even in everyday life, you got to block and tackle every day. If you can get 1% better at whatever you're doing every week,
What's compound interest on
You
that?
get 52% better out of it a year. Whatever you're doing, whether it's working out, whether it's closing deals, 1% a week, 1% a month. I don't pick your number. Consistent, you know. Even water dripping on a stone eventually leaves a mark. You just
where are
keep
you coming
dripping.
up with these things?
Dude, I'm just gonna continue to write stuff down. Hey, can we write that down over here?
No, Eric, no, say that again. Eric, say that one more time. What is it?
Even water dripping on a stone eventually leaves a mark.
Yes. You guys hear
Keep
that? You guys hear that?
blocking, tackling, and
Yes. You can't see
get
him with the
1%
bright light.
better every week, 1% better every month, and whatever you're trying to do.
I think if people just cut out a couple things that you said and really just use those, that's some deep shit.
So we got to go to fire round, man. We got to go to fire round. So, are you ready? Are you ready?
Yeah, I'm gonna try.
Now, you say you don't want to talk about this first thing.
Okay.
I'm kidding.
Puppies or kittens? Which one?
Puppies. I don't trust cats. They're
man.
mysterious. They're always up to something. Yeah.
Yeah, let me hang in on
Okay.
camera.
Ambition or comfort? It's an easy one.
Ambition.
Okay. Poor but famous or rich and unknown?
Rich and unknown for sure.
Ooh.
I agree with that
I
one.
like that.
Poor and
I like
famous
that.
won't last.
It doesn't, unless you use
you
your
always-
fame
yeah,
to be
you
able to
always
continue
use
to get
it.
rich, which is
Yeah.
kind of like the new economy, right?
Yeah,
Attention is the
yeah.
currency, right? East Coast or West Coast?
Oh shit.
And I gotta get.
I'm
I gotta get
gonna
one
go
story
50-50 there.
after
I think I'm gonna say I'm gonna summer in East Coast and winter in West Coast. But I love the Midwest. I think it's the best of everything.
Yeah, it's the middle of West, even though that makes
Yeah.
no sense.
this. Marvel or comics?
Marvel,
Pancake or French toast?
French toast.
Blonde or brunette?
I gotta
This
say
was
blonde.
my segment. This was my segment.
say that one.
This was my segment.
that one.
I gotta say blonde, and you know,
Steph loves
my
me for that.
wife is one of them.
Oh, me and Eric got more in common than I
By the
thought.
way,
You know?
when me and my wife
Steph
hung out
or
with you and your
blonde?
wife, dude, she had, and that was like the first time, like, well, second time that we've actually like just been out and done anything by ourselves, and we had a absolutely phenomenal
Yeah.
time. So, anyways, guys, man, this has been really, really fun.
fun
This
one.
was a great
Eric,
one.
thank you, bro.
Thank you so much. We appreciate
Thank
you
you, bro.
coming on, buddy.
Thank you for coming
You're
on.
the man.
Anyways, guys, thank you for tuning in to the Let's Be Honest show, where we talk about business, lifestyle, and everything else in between.
Strippers not too.
Until next time,
My money don't
we'll see you
jiggle,
guys.
jiggle. It folds. I like to see you wiggle, wiggle. For sure. Make it